everybody, it's Michael here from the Trading Institutional Order Flow thread on Forex Factory. I hope you're well. I hope everyone had a great Easter. A big thank you to the guys who attended the webinar last week. I hope it was useful information for you. Today I'm going to do a roundup of the markets, the major markets that we usually look at. It's non-farm payroll day. So we're going to look at weekly and daily charts. So apologies if this video is slightly longer than usual today, but I thought it would be useful just to go through some daily charts and also some weekly charts, as you can see on the screens. And also at the end, I think I'll just answer YKN4F's question about smaller time frames. Hopefully we'll get time to do that. So let's get started as usual. We'll start with the dollar. I mean, we've talked about this in previous videos, but the dollar continues to remain in this range, and you can see it clearer here on the daily chart. We still have it struggling to break through that area. It's beginning to form a base right here, and the number of times that this level has been tested, we're looking about 4 times now. This is the 5th time in. So it's very likely that we're going to get a bigger push, possibly break through that area and be left with a demand zone there. In terms of weekly zones, still the same zones. We have that's the zone on the weekly that's holding it down. And in terms of demand, we are still working off of that demand level that's still holding prices up. So those are the views on the weekly chart of the dollar. For the daily chart, we have demand down here. As I said, we're possibly forming a level here. We'll have to see how this holds up. Hopefully the non-farm payrolls, which I believe is today, will give us a bit more direction on the US dollar with all the trade wars and things going on over there. Okay, so that's the US dollar. Looking at the Aussie next. In the Aussie, we are still where we are. Nothing much has changed. We're coming back down to this level, and we have these 2 levels that we've talked about in the past also still present. So we're still working our way back again, even though this level as well has been tested before. We've gone deeper in, which one would expect, and we're pulling back now again down to these levels. So it's a challenge to buy it now, or rather to sell it, because of where we are, because it's already had a big enough move. Opportunities to join it already have come and gone on the daily charts. So we are where we are right now. Here is where we are on the daily, and the lower levels there. So grinding through this area, possibly trying to turn here. We'll have to wait and see. The momentum is definitely waning, as you can see. When we identify downside momentum, it's definitely testing right now. Whoops. So we'll see if we can't break it and we continue to push down, then we possibly will be looking down to here. For now, it's testing the upside to see if it can get any traction. So watching and seeing the Aussie, there we have it. And for the euro, be the opposite of the dollar, we have it sitting up in here. This week it's taken a little bit of a move down. We still have the demand levels down here in the euro that we're looking at on the weekly chart. So coming off of supply with some room still to go to the downside. For the daily view, that's what we're dealing with. That's a decent looking level closer down into the weekly demand there. We have another one here as well. So those are the levels that we're looking at on the daily and the weekly. So right now, coming off of this supply zone with the second time in and beginning to grind its way down again, the NFP will possibly help us come out of this range and get a bit more directional movement for these markets. Looking at the pound still continues to hold up. It's not really falling, even though people have tried to short it and consider that it's moved too much and it's time for it to come down. It's starting to hold up at these levels of supply, but it's not falling. It's not falling significantly yet. It is at daily levels of demand that we're going to be seeing the fight now going on. So it's definitely one to watch. We have supply up in there on the daily. We are beginning to form a level here, but this may just be a flush out of this basing to go back up. We'll have to wait and see unless this level has a bigger move away. For now, it's one to watch. So that's the pound. There isn't anything up until the pre-Brexit levels down in the, up in here and down in here. No real quality levels in here for demand, really. So we might have to wait for new ones to form. The New Zealand, again, you'll notice as we talked about a couple of times already in the last few weeks, these markets are pretty range bound right now, a lot of them. So definitely be mindful of that and trade accordingly. We have those levels on the weekly, and we have this market still being held up right here, and we have the upside again. It's not the greatest level at all, but it's the range that we have. If we break out of it to the upside, we have that to deal with. Coming further down to the downside, we still have some demand down in this area, and then lower down. The US dollar Canadian for the weekly view, some more decent levels on this one. So the US dollar Canadian demand on the weekly chart, and you have a couple of supply zones up there. We're going to be going into these areas coming into next week, and maybe even non-farm payrolls today. We might get a pop to either side. For now, on the daily, we have levels everywhere, so be mindful of them. Watch the profit margins as you're coming in as well. So those are the levels on the daily that I will be watching, and the ones on the weekly. For now, it looks like we've taken out some buyers in here, so we are beginning to create supply above us, and we have demand below. I'm sure you guys all have your various strategies for engaging these markets. We're not going into the multi-time frame analysis sort of levels as to how we actually get into these trades and the mindsets and what to watch out for. We just don't have a lot of time, because I try to keep these videos as brief as possible. We talk about it a bit in the webinars. So those are the levels that we're dealing with for the US dollar Swiss. We're forming a demand zone here on the weekly. For the daily, we have levels here. That one's been tested. It's not really that fresh. The move away is not inspiring, and we have supply quite close. Have some supply there, so we are in an uptrend on the daily, with room to go on the weekly. So pullbacks may still serve as an opportunity. So if we're going to trade that, it's probably best to use a confirmation entry, because as I said, the move away is not great. It's not fresh. So watching that for a potential confirmation entry may not be a bad idea for short-term income. And the US dollar Japanese, we have the supply zones, or a couple of them actually sitting up there. We are basing here, trying to turn out of a base to go to the upside. We still have all of this area to get through for us to definitively turn up. We may be left with demand, but for now there isn't anything quality in here, so I'm not going to spend too much time in. Again, probably best to wait for the NFP, and you just have that big wick there. So probably best to wait for NFP to get the direction that the markets want to go. As we said, we have supply up in here on the weekly. And the gold chart, gold is holding at this area. The guys in the round table and we've talked about watching gold it's in a big sort of 5-year base that is trying to break out to the upside. The fact that it's holding up in here despite attempts to sell it off is a good indication that we may get a push down, a push up rather, in gold. but a push down in the equities would help it. A push down in the dollar would help it. So we haven't had those because the dollar's been basing. It's possible that's why there hasn't been much movement in gold as a result. So when the dollar pops, and gold will also pop. So again, the fundamental data coming out may give more information. So those are the levels that are above us. We have this level below. These are for trading purposes, not so much for their quality, but for their areas to be mindful of. And that's the weekly chart. For the daily chart, again, you can see that basing much clearer. For short-term income, we have that level there. We've already hit that level. So it's in between now. Nothing really to be done for short-term income there. And on crude oil, the levels we've marked off have already started working. We are watching that area. I was talking about it with the guys yesterday. For short-term income, this is what we're dealing with. So we've already come off of demand and we're beginning to make our way up. So just for kicks, let's take a look and see if we have anything. Nah, nothing there. Nothing there right now. So again, the trade was yesterday. I think one of the guys in the group was looking at this yesterday with me. So we are into some weekly supply, and that's why we're seeing the move down. But we've got weekly buyers over here, so we'll see if they can cause some sort of push higher and get out of this range that we've been in oil. And above us we have that level there for supply. We are still working off of that level. That's what's keeping everything down. We've tested it once, we've tested it twice, so we'll see what happens with that. And finally, a look at copper. Copper is still basing. We now have supply there. We still have this whole demand zone that hasn't been removed yet. It's still what's below that's holding prices up. So we'll see which one gives out and then get a more directional move. But for now, you are in this sort of range, moving up and down. And nothing really exciting on the daily. So again, it's one to watch to see what happens. Okay, so before we finish, let's take a look at YKNF is a new member. Welcome to TIOF, YKN4F. And you had a question about lower time frames. So my take on that is pretty simple. Identifying zones, regardless of whether you're using a 1-minute chart, a volume chart, a tick chart, a monthly chart, is the same process that we always talk about. Starting with current price and going above and looking for big moves down to help you identify supply, going below price and looking for big moves up to help you identify demand. Regardless of the time frame that you use, the process remains the same. That's why it's a very process-based methodology. The processes are just transferable regardless of the time frame sequence that you use. Yes, the smaller time frames do have many more zones, of course, because you have time in shorter chunks. So it's important that one is much more picky, much more make your zones that you're going to use to trade jump through more hoops to qualify, which multiple time frame analysis and understanding where you are in the big picture and how to align your zones with your big picture trends and all of those things is very useful, because on the smaller time frames you'll have a whole load of different zones. So it's important to be very careful which ones you actually do use. Not all zones are created equal, if that makes sense. So with that, guys, I think I will end the video. Again, thank you to all of you for continuing to share your ideas and posting on the thread. Thank you to those of you who attended the webinar last week, and the videos have already been sent out to the attendees. I'm sure you've got it. If anyone of you is interested in taking up the Storehouse Analytics mentoring program, the roundtable weekly meetings every Sunday, 8:30 p.m. UK time, or you just want the videos, just let me know. It's storehouseanalytics@gmail.com. I wish you well. Take care, everybody. Bye for now.